everyone. Welcome back to another edition of Outdoor Hospitality Weekly. I'm Alex Burkett, joined as always by Matt Whittemore. And Matt, we're coming back from a little bit of travel here this week. I know, man, I was tired after a good few days. I know we saw a lot of people who listened to the show, who are great industry connections, amazing partners, vendors, people from all across the country that we don't get to see, including, we got to see each other in person again for the first time in a while, which is always fun. But coming back from the national conference, the Outdoor Hospitality Conference and Expo this year in Louisville, Kentucky, we wanted to take some time and just kind of dive into our experiences, some of the learnings from the show, trends, and really just talk about, all things outdoor hospitality as we head into the new year. So, Matt, I'll let you kind of tee this up. Obviously, we're both kind of going to approach this from a different side. You obviously as a park operator and somebody who kind of saw the show from more of a vendor experience and trying to line up partnerships, and myself from the operator GM side of things. So with that, why don't you kick us off?
Yeah, what a week. A lot of fun. I'm still recovering, I think, honestly.
A lot of bourbon, man. A lot of bourbon.
In Louisville, so Bourbon City, and I'm a bourbon guy, so drank a little too much bourbon, ate a lot of comfort food, a lot of smoked meats, and the body needs time to recover. And I'm an early to bed, early riser kind of guy, and we were going 7 a.m. to midnight most nights, and but what a blast! A lot of really fun events, getting to connect with people that are old friends like yourself, a couple others, or kind of new internet friends that you feel like you've gotten to know virtually, and then you get to spend some quality time together and really foster and develop those relationships. So tremendously rewarding, fun, action-packed, lesson-filled week that I took a ton away from, and a lot went into it. We had pretty much the whole Unhitched squad there, and we had a camper van as our booth, which was pretty cool. Got a lot of buzz and talk, and
I was gonna say on the video version, I'll pop in a photo here so people can see this. This thing was sweet.
Yeah, right. Shout out to Reed and Christine, who are our advisors and partners and the owners of that van, and they attended and added a ton of value. And shout out to the team. I can't take credit for it, but a lot of prep work went into this. On my side, it was a couple weeks before, trying to schedule as many meetings as possible, and I think it was successful. Right, there was a ton, and it's my first show, so I'm kind of just comparing off of what I've heard from you and from other people that have been there a few times. But my takeaway was heavier investor and private equity presence, heavier third-party management presence, which I think we were a big part of, since we had 10 people roaming around the conference all in unhitched swag. So I think we made a little bit of noise. Obviously, technology partners with your PMS providers. I'm wearing the Campspot hat here that I got.
Lots of fun gear. That's always nice. I feel like I come home with a new wardrobe.
Yeah, for real. So a lot of encouraging signs. I think we'll dive into it a little bit more. But my main takeaway was, pragmatic optimism. It's been a tough few years in our industry. Transient demand has been the big story of being down for a couple of years at least now, and I think based on anecdotally what I've heard from people is last year was kind of more not hopeless, but a little bit survival mode, whereas this year was more problem solving, pragmatic optimism, people exchanging ideas and really actionable ways to overcome flat or down revenue, which is the story across a ton of parks. So really interesting time, but really great event. A lot of knowledge shared, a lot of really great sessions. How about yourself?
Yeah, I think I had a similar takeaway as you said. For us, at our property here in Michigan, the story isn't that much different. We had what was a decent year revenue wise, but flat just in terms of that transient demand, and something we've discussed at length in previous episodes. I think going in right in talking with other operators, there's a sense of trying to get an edge, right? Like what's the thing that's going to deliver that extra couple points that are going to help you increase your revenue if you're not going to be able to kind of combat that on the occupancy side. So like you said, Matt, we engage with a lot of new partners, particularly folks on the marketing side or with vendors that are going to help add ancillary revenue, things that are going to kind of carry that revenue line forward. That it's about getting people in the park, selling them more things, and kind of increasing that average price paid on the site night. It's not just about what we can get for my RV site for $50 a night. It's how can I tack on another 10, 20, $30 a night to that reservation over the length of a stay. So I think there was a lot of conversations like that, as you said, a lot of kind of reevaluation of what partners people had or what tech options they were looking at. And as you said, I think third-party management has become not as taboo as it was before. I would say that it kind of had a bad rap for a lot of years. Just people who owned parks that did third-party management were kind of looked down upon, and I don't know that that's the case anymore. I think that's an area where a lot of people are looking at to try and get their edge, to say capital might not be our problem. We want to kind of maybe find more deals, but I really don't want to have to worry about the operation side, or I want to kind of take that off the equation, somebody that's going to pay attention and manage my revenue, manage the properties well, where I can just continue to go out and look at what are the great properties that fit my portfolio. I think it's less about like the flashy numbers of, I'm added 10 new parks to my portfolio this year, where instead it's more of the, hey, and we're taking this approach as well. Be more thoughtful with it, get the right parks that are going to fit within your portfolio, run them really well, in kind of its growth, and it's good growth, but it's a little bit more slower and measured growth. So overall, I think, a lot more thoughtful conversations and a lot more just kind of people taking it from that 101 level strategy all the way to like a 301, 401 level strategy, which is exciting to see. And it's exciting to see so many vendors kind of positioning themselves to help with those solutions for operators.
Totally agreed. It's an interesting market out there, and I think we're, having been in the business for a few years, and there's a new wave of these growth-minded operators and investors that maybe you can loosely define them as private equity, but it's not the old kind of cliche stereotype of private equity of build scale, cut costs, jack up rates, severely damage the guest experience and guest relationship. I think it's a really good positive sign for campers, honestly. That one of my big takeaways was I'm excited for myself as a camper and for the rest of the consumer base of campers, because I think there's a lot of groups that have the right idea that guest experience is the priority, team is the priority, really. You prioritize your team, who prioritizes the guest, and then the shareholders are taken care of, naturally that way. So really encouraged. I was really impressed with all the different tech vendors. I think that's also really encouraging. It's a really tight competition. It's a friendly competition. It was funny. We were sharing drinks with people from New Book and Campspot and Staylist and Rover Pass, and everybody's getting along and sharing ideas, even though they're directly competitive. And that's another thing, that when there's healthy competition among the vendors like that, we all win, right? Because they're all going to force each other to get better. I think, there's some clear kind of front runners, probably the groups that I named in that space, not to count anybody else out by any means, because I think it's there's room in the market. There's so many providers that have a few hundred clients, and that's enough to have a pretty healthy business. So it's what you do with it. It's how you innovate and right? AI and technology were huge topics of conversation. I still think we're in like the first at bat of the first inning. Not even, right? Like maybe the pitcher's still warming up. We're in batting practice or something. Um, but it's people are aware of it. People, right? There were several sessions, and I looked around, and people were furiously taking notes, and it's encouraging. I think people are hungry for it. They're waking up to it. I think it'll, right, with the angle of the philosophy that I noted before, right? And I kind of want to dive into the revenue management topic because that was one that really stuck with me. But along the same lines there, right? Technology and AI are a tool to operate more efficiently, but not for directly a cost savings benefit, but for more leverage to provide a better guest experience and to have a healthier business. Because the healthier your business is, the better guest experience you can provide, and that's right. That's the circle of life in our business. So that's my another big takeaway for me. What do you think? Should we dive into kind of the revenue management side of things?
Yeah, and I was going to say to kind of tie the two together. Obviously, you mentioned Campspot being one of the PMS providers that's really leveraging this, and they announced while we were at the show and have been teasing it for weeks the AI pricing recommendation, something that, as you said, is an AI really going to be able to understand what you should be priced in the market or do a good comp set and things like that. Maybe not, but having the historical data from your park and also understanding what pricing looks like in the market, as you pointed, Matt, it allows you to make better decisions. And I know from the operator's side, if we want to do a flash sale or we're trying to adjust pricing because we're forecasting that demand is low, to have to take the time to sit there, understand, well, I'm priced here currently. How should I be moving this pricing up or down based on different events or what demand looks like? It's a lot of time. And it's something that unless you're one of the larger groups, and I know Mike Harrison, somebody we both, love and respect from CRR, he spends a lot of time in this and he can afford to
Sure.
to do that. They have a lot of really high quality parks across the country where it's his job to pay attention to this stuff. And not that it's not a single park operator's job, but it's, this is a single thing on a plate that's 1,000 feet high. So AI is certainly the way that you're prompting it, the way that it's using your own existing data from your park to help you make informed decisions based on the parameters that you set. Those kind of things are very helpful in order to help make those type of adjustments. So I think, not only is AI going to help with that time savings, but it's helping in the key areas such as revenue management, which was a major topic of conversation this year.
For sure. Yeah, and I got an opportunity to spend a few minutes with Michael Scheinman, the CEO of Campspot, and they graciously invited me to their VIP event, which was really cool. It was a tour of the Louisville Slugger Museum and some bourbon tasting and just some fun conversation and just a lot of good laughs and good, just a good time all around. Not really discussing business directly, but meeting a lot of industry peers that I've followed from afar and got to sit with and get to know them a little bit. So that was really cool. And one of the things that stuck with me was during the panel. I can't remember the name of the panel, but it was like the tech panel that Michael Scheinman was on. And his big point, which I couldn't agree more with and really resonated with me, is that 2026 is going to be the year of strategic revenue management. And I don't think, right, I think people understand how important revenue management is, but I think people tend to either way oversimplify it or way overcomplicate it. And it ties in with technology in that technology is a great tool for revenue management, right? Dynamic pricing and all different types of rules. And then you get into the likes of price labs and aggregating data and processing data and coming up with pricing. But to me, my takeaway was technology is the last step or should be the last step in implementing your revenue management strategy. And there's some really basic things to do that you can do on a napkin that set up the foundation. And I think I've done this in across my professional career of jump to technology because that's the ultimate leverage. But if you don't really understand the basics of what you're getting into, you're going to spin your wheels on the technology. And then also there's this spectrum of, on the positive end, technology as a leverage, as I noted, but on the other end of the spectrum, like technology as a crutch. And I see revenue management as a really, good kind of application for that concept. And I'll dive in a little bit more there. And I'd love to get your thoughts too, because you're obviously experienced in this area. But one of the big things, right, is understanding your customer base, segmenting your customer base. And, right, that's booking behavior, booking window, lead time on a booking. There's planners, and then there's last minute bookers, and there's kind of some in between too, right? Planners, I would say, are like 2 to 6 months or more, a full year in advance. Last minute bookers are like 14 days or less. And when I look at that, it kind of leaves this interesting like middle area of like 15 to 59 days booking window. But then there's also, right, what makes the campground and RV park and outdoor hospitality business very unique is the length of stay. We have these long-term stays, we have medium-term stays that are pretty unique to our industry. And so that's the other area, right? And revenue management is just as much about demand as it is supply. And a
Yeah,
huge,
what's the right site mix that you should be
exactly,
positioning?
like you nailed it, right? And I think there's a unique recipe there for every single campground in the world, probably, right? Right, in the Northeast, we have a lot of seasonal, full season stays. In the South, you have snowbirds, but you also have a lot more transient, right? In resort markets and resort style parks, you're going to have a lot of nightlies and maybe weeklies. And it takes understanding your market and your park to understand what the perfect site mix is. And then even there, it probably takes some trial and error and some experimentation, right? Your infrastructure and your site sizes and pull throughs versus heavily wooded small back in sites, right? That kind of predetermines what you can do with it. But it's a really interesting formula that makes scaling and the conversation around scaling really interesting, because I think you can have like a portfolio wide revenue management philosophy and strategy, but I think you really need to customize it for each park and honestly each site, right? Like, I think the basic kind of approach has been convert sites to long terms. That's more predictable. There's been trouble with transient demand, but I think a lot of people just say, okay, well, I'm going to prioritize long-term sites, and then whatever I can't rent as a long-term site, that becomes a transient site, or vice versa. I'm going to prioritize transient sites, and then whatever is having poor occupancy, transient site-wise, I'm just going to try and stick a monthly in there, which probably isn't a bad strategy, right, in general, but there could certainly be a lot more sophistication there. I think you would do yourself a service to have more than two site types, essentially, right? Long term and short term. So, not I don't have the recipe for everybody, but I think it's just a good kind of thought exercise of who is my customer, what is my market, what do I have to offer, what might I need to change about my park, and how do I find that right mix, and how do I test to get there as soon as possible. What do you think? What am I missing there?
Yeah, I think there's a lot of good points there, and I think Mike Harrison in that talk, I'm referencing my notes here, summed it up well. He always looks at how are you finding, or how are you doing getting the right site at the right price delivered at the right time through the right channels to the right customer, right? If you can nail all those 5 things, you've got the winning recipe when it comes to revenue management. And as you said, Matt, the portfolio wide site mix is something that I think people have kind of maybe overstated or tried to simplify too much, right? And tried to kind of distill that down. I would say if you're buying similar types of campgrounds that fit within your buy box and what you're looking for, you can probably generally start with the same thesis when it comes to that. But I'll say, look, here, when we came in, and this was prior to me coming on board to our property, we made a little bit of a mistake, right? We had about our campground is about 160 odd sites. About 70 of our sites, when first taken over, were long-term seasonal sites, and the rest were transient at that time. So very heavily on that seasonal side. Over the next couple of seasons, that got pared down very, very to a really low number, right? Where last season we had about 20 to 25 people that were considered either monthly or seasonal sites, and this year we're having to kind of move back in the other direction and say we recognize that we pushed a little too hard here, and that one, our transient demand is a little bit softer. Two, looking at our area and getting a lot of linemen, people who are on construction projects, like that kind of customer is the type of people who are staying in our market. So you talk about understanding your market, and I touched on this during my my talk this week. Talking all about how are you magnetizing your market, how are you reaching the type of people that are actually truly going to fit your park. And I think sometimes it takes a little bit of that trial and error to go through that process a little bit to figure out, okay, yeah, we're a little bit more of a stopover park than we thought, where we are getting more people that are staying for the long term, that are more looking for workforce housing, if you will. We have a local, hospital and orthopedic center not too far. It's getting traveling nurses, right? These are all segments that when first buying the park, there wasn't as much emphasis on, but over time, I think your park and your market will somewhat tell you what you need to be doing and how you need to be adjusting and how you need to be priced. But I think the other part of this that I don't think gets talked a lot about is we all talk about, traditional segments of your market, and you hit on a lot of them, Matt, as you went through this, right? We all know families, solo travelers, retirees, the type of RV sites that are at a lot of our parks. If somebody wants to stay short-term or long-term, those are all great. And that's the traditional segments in which, when most of us are doing the elevator pitch and describing our park, that's probably how we're describing it. We have, X number of sites that cater to those people, and it's a very important way that we go about describing that. But I think people, and we're starting to kind of look at, back to the, 301, 401 level strategy. What are the non-traditional segments that we could be targeting? What are more of the interest groups and the things that the activities that people participate in, and how can your park be positioning around that, right? So I gave an example in my conversation and there was a gentleman in the Northeast who had a really cool mountain bike park, and everything about his park has been catered to this. They sell bikes, they repair bikes, they have a cool gear shop, they're right on mountain biking trails. People come in either tents or RV sites for mountain biking, right? And obviously we all know what his market is. He's made a nice stake there, but what can we be doing as park owners who maybe don't have that kind of thing to still position ourselves and attract people who participate in that type of activity? And whether that's, hosting events, KOA's done this well with a lot of their canine sites, right? There are a lot of different ways where you can take traditional segments that are known to be RV customers and where you can really begin to position your sites to take care of that, right? So looking at that KOA example, if you took, what might be a crappier back-end site and you converted it into a luxury, canine corner site, I think is what they call it, with the fence and all the stuff. And now you're positioning yourself as a really luxury, unique site for pet owners. And you're turning what would be a bad site into one of probably your better sites. And I'm sure, if we were to look at the revenue management there, they can charge a hell of a lot more. And that's a much more premium accommodation than just kind of saying, I'm going to take this and stick a long-term there and hope for the best that somebody fills it, right? It's about finding that right site mix. And I think a lot of times those interest groups, the hobbies, the activities, the type of things that people do, outside of just their traditional segments, is a missing piece to this whole equation that we need to do a better job of starting to talk more about.
Well said. And you touch on an interesting kind of tie-in there with the revenue management discussion is, right, it's not just a tool to like compete on price.
Yes.
And that's probably the worst way to use it because
It's a race to the bottom, and then it's just
100%.
whoever's going to be the cheapest at any given night.
Right. And that's not a good story for our industry. So, right, I mean there are commodity parks out there and right, if as an investor if you have the right basis and you're well capitalized enough to really, stomach some lean times and that it's not a probably not a bad investment thesis, but it's not really hospitality. So that was a big takeaway for me too is lots of interesting ideas getting tossed around on the flip side of that of all right, let's figure out revenue management, but let's also figure out interesting cost effective ways to provide an interesting guest experience. And it's nothing new, right? I mean, that's the core of what hospitality is. But I think it's refreshing to see a return to that. And really, for most, it's not really a return to it, but I think it's for the new entrants, myself included, right? You know, came in with, early COVID or pre COVID with big dollar signs in their eyes. And, it's an incredible macro environment. It's an incredible industry. The supply and demand in a lot of markets is very favorable. That's changed over the last few years, but
And Matt,
I
is
think
I was going to say, as you said, I think that gap between the people who have more of that, maybe more stable long-term workforce housing or the kind of low price per night, and a lot of the parks that are going maybe more of that RV resort or on the luxury side, I think that gap might be widening from what I'm seeing. And I think there's maybe less parks today that are maybe truly sitting in that middle spot to the point of maybe trying to at least take portions of their park through upgrades. And if you looked at the highest of high priced, best RV sites in the market today, I think there's a lot more of those today than, let's say, there might have been 5 years ago. I still think you can find a really good deal at a lot of parks, and you can find, nights at our park for $40, right? That's an insane deal.
yeah,
But I do think that the highest of high end is, and to the point, a better guest experience and a better delivery of that, nice RV product. I think that has become, I'm seeing that more and more in the market today. And even in our local market here in Michigan, we're having to compete a lot more with parks that have really amazing, beautiful sites than I think we might have been 5 years ago.
interesting. Yeah, that's a really interesting observation. So, what else? Any other takeaways from the conference?
Well, I was going to ask, and I know I touched on this earlier, and obviously you being more of the, capital business development acquisitions guy, I touched on kind of how people, and as you had conversations with people who are multi-park owners or own portfolios, how are you seeing them think about how they're constructing this moving forward? Has there been any shift in strategy coming out of this, or is capital still available? Are people still buying? Right, I think that's always something where if you can get that many people in a room who are all buying parks, I think there's a lot of lessons to learn about just what's the state of the market look like as we this is obviously a good time to do this as we round out the year, and obviously seeing everybody in person might have given you some new insights. So anything there?
Yeah, and this was in the newsletter a couple months ago about kind of signs of pre-distress in the market, and it's just an interesting dynamic where it's not really directly apparent in the listings that you see, especially right. Texas is a tough market these days, especially Houston, Texas, and a lot of my examples I take from there, where it's just overbuilt. Tons of development happened in the last few years. That's one instance. I think there's also location and geography independent instances where syndicators came in and overpaid for parks all over the place and had misaligned or, I don't know the right word, but the wrong expectation about what was going to happen with the business and what was going to happen with transient demand really all over across the board. So we're seeing those opportunities where, right, people are upside down on properties, or they're trying to just sell it for the value of the note, what they owe on the property. And that's right. It's openly discussed, right? I went to a dinner with a group of brokers, Yale advisors, which that was a really awesome dinner, and just a lot of open discussion about the state of the market. And right there's always opportunity. It's just how hard you're going to have to work for the opportunity. And I think there's a lot of those deals out there that once you dig in and learn the circumstances of it, it's kind of a yikes moment. There's a lot of those, but I don't think it's all independent circumstances, right? I always preach that every campground, every RV park, every outdoor hospitality property has a supremely unique business model. There's themes and similar models across the industry, but right, every campground has its own little quirks, that they collect payment a certain way, or they offer some service differently that changes the makeup of the revenue. It changes the operating expenses. It changes the operating model, and you can't ignore that. So, it's funny, I've talked to people who were pretty bullish, talked to people who were more bearish. I think I tend to be sometimes more bearish on the market, in that, right, it's such a small niche. There's so many new entrants. We talk about supply and demand on the consumer side a lot of times, but I think about supply and demand on the investor side a lot, that there's incredible demand for these types of investments, but there's a very limited supply of good investment opportunities. I've spent a lot of time kind of upgrading our CRM and our acquisitions process, and so many deals out there with 4, 5, 6, 7% asking, cap rates, and even those are with pretty aggressive, pro forma numbers sometimes, and it's insane to me to pay that much, and I don't think people really are paying that much. And that's why you see a lot of properties sitting for a long time, right? I had a conversation with a broker a couple months ago that really stuck with me, that she said it's at least a year to sell a campground, right? List it. It's at least a year. It might even be 2 years in this market. So great business, great industry. I think there's a lot of things to be excited about, but it's tough sledding out there as an acquirer of parks. But the more creative you can be, that creates more opportunities, right? If you can find a way to monetize smaller parks, a lot of groups out there are at $1 million plus gross revenue as their target buy box, which there's only so many parks out there that generate $1 million plus in revenue. I would estimate there's maybe 1,000 or 1,500 of those parks in the country. And right, we track 70 groups, maybe 75 groups that are multi-park operators and acquirers. So to have 70 groups chasing 1,500 or 1,000 opportunities that's out of whack, right? That's a lot of people preach, oh, it's so segmented. It's such a segmented industry. It's so mom and pop. Mom and pop owns 85% of the campgrounds, but also 85% of the campgrounds are largely viewed as uninvestable. That's how I look at it. So I always tell people, I think the top end of the market is saturated, is consolidated largely. So I think the groups that figure out how to buy like 50 to 150 site parks that are, $400,000 in gross revenue to $900,000 in gross revenue with some upside, I think that's the next wave to probably get consolidated. There's more of them, but it's a harder task, right? It's tough, right? That the first big chunky line items that you're going to go after are payroll and marketing. and you need payroll to operate it and provide a good guest experience, and you need marketing to get more occupancy and to create your own demand and to raise your rates. So without those two things, that's the puzzle that I think we're all really trying to figure out. We'll see.
Yeah, and I think to just put a bow on this before we start to wrap up, I think, as you mentioned, portfolio operators and even us is with one park and aspirations to grow are kind of continuing to focus on that customer experience, and whether that is through, I wouldn't necessarily even term this CapEx, right? Adding things like, we're going to add a gem mine this year, right? That's not a cheap investment per se, but the ability to add ancillary revenue through that, there's good payback there. Not only is it increasing the revenue in the property, but it's something that increases the value because of it. So I think people are making, using that as an example, I think groups are making smarter investments in things like that. How can I improve the experience that way? How am I able to get revenue in other more creative ways? And kind of going back internally to either say if it's going to take me a while to buy a park, or I'm being more selective in how I'm growing and what my future operation is going to look like, what can I be doing to improve and enhance my parks currently that I have in the portfolio? And I think that's been a little bit of a trend in the last couple of years. And I think that definitely was something that I heard talked a lot about, was people, again, looking at new partners, new vendors. What are things that the people can bring in to really improve their property? And I think that's probably not going to change anytime soon, especially if the market conditions remain as they will. And Matt, I know as we started to wrap up here, I know we talked a lot about OHCE as the conference, and I'm sure we can add in the show notes info for people if they want to look at this for next year. I know it'll be in Fort Worth, Texas, so anybody who's kind of in that southeast south central market, that'll be a nice location. I'm excited to go to Texas. Which
more smoked meats, I would assume.
Yeah, exactly. No bourbon this time though, so maybe we'll leave a little bit more
tequila. I don't know.
Rested. There's all kinds of good drinks, good food. It's probably going to be hot like crazy next November, but I'll take it over the snow. But I know there is another conference coming up that I think both of us will be able to attend. And if you're listening to this, watching this, want to either connect with us in person at one of these shows, get some great education and things. I know, Matt, we just wanted to talk about, maybe some differences between the two. And again, let people know that, hey, like this is the second national conference of the year. So if you miss this one, this would be a great opportunity. Particularly, I would say, if you're somebody who wants more of a hands-on education is much more of a focus here with this kind of show. There's a lot of I would say kind of that smaller mid-segment operators, people who have 50 to 200 sites, probably a lot more of those than, let's say, traditional capital partners, although I've heard from a lot of capital and portfolio people that they are going to be going to the show this year. So I think it'll be a nice mix. It's in Branson, Missouri this year, and I think, Matt, this will be your first time going, second time going?
No, first time. I'm excited. I think it'll be a good show. My understanding has always been that it's, and I don't mean this in a derogatory way, but it's more mom and pop, right? It's, whereas I think OHCE can kind of have a more institutional feel, right? A lot of the people we hear from are CEOs of pretty big companies and big operators, whereas I don't think it'll be totally invisible at COE, but I think it's just a more mom and pop, more educational feel. Definitely think it's probably, just given the location, it's more of a Midwest focus. Although it is a national conference, so we'll see people from all over. But I think it's probably a more Midwest focus across the board. What else?
Yeah, I would say, and look, as we've talked about, like this is good opportunity to connect with those folks. Who knows? There's opportunities to buy. I've heard of a lot of those type of transactions coming. There's good opportunity too to see a lot of parks. I mean, Branson has a lot of campgrounds in a very compacted area, and for me, I've seen some of those parks. There's some of the bigger names in the space. Great Escapes has one of their parks in Branson, right? There's some the Embers, which is one that Matt, you and I have probably seen on social media before. Really nice, new new build with glamping and all kinds of things. It's in a nice location to. I always take a lot of value from that, right? Not only obviously as you get to network with operators and hear and see what they're doing at their park, but physically to be able to leave. There's I think it's maybe Friday afternoon or Thursday afternoon on the conference day. There's a separate ticketed event that you can go to, but if you don't participate in that, I've always loved the opportunity to go out and see these parks in the market and just be able to you can always learn something, a best practice or two from just seeing what other people are up to. How are they looking at their unit mix? How are they positioning? And in a very touristy area with a lot of competition, especially in the higher end of that market, I think that's a really good experience for people to take advantage of, and would highly encourage, obviously, as I'm getting into the off season here, you as well. Park tours are one of my favorite things, and I think that actually seeing it and experiencing it and the community that you develop there, I know I met a couple people who have Michigan parks not too far from me here that we're going to go and swap and see what are you doing? Come here, see what we're doing, right? So I think that the community element to just underscore both OHCE and COE is a really exciting thing, and always something that I'm happy to see when you go to these events. So,
Same
Matt,
here,
any last thoughts before we wrap up?
I don't think so. Couple weeks out here, so.
Right, I was going to say,
a few weeks, bud.
That's right. Especially if people want to jump on this, it's right after Thanksgiving, beginning of December. But who knows? I know we didn't get a chance to record a live show from OHCE. Maybe we'll get to do it here at COE. So
not a bad idea.
Who knows? And look, if you want to meet us, or if you don't want to meet us, then definitely stay away from the show. But if you do, we'll look forward to seeing everybody here in a couple weeks, and appreciate everybody for watching today.
Thanks, Alex.
Thanks, Matt.